Hello traders. In today's video, I'll be discussing the differences between Forex and CFDs versus futures prop firms. Many people asked which one is better, so I'll share a clear comparison based on my own experience. I listed 8 categories in the comparison and the ideal for with some tips to help you decide which option suits you best. The prop trading industry is crowded with firms offering trading capital ranging from $5,000 to $400,000 for Forex and CFD products. But are these truly the best and most reliable options, or do futures prop firms offer a better path for retail traders? Let's start with the platforms. Most Forex prop firms use MetaTrader, MT4 and MT5, because they're the most popular in the industry. Some firms offer CTrader as well, and others use platforms like MatchTrader. NinjaTrader is the most well-known platform for trading futures, and Tradivate is also popular and widely offered by futures prop firms. You'll also find platforms like Jigsaw and TradingView. As for Rhythmic, it's not a platform, it's a data provider that integrates into these platforms. Keep in mind that Forex is a non-centralized market, so the data you get depends on the broker connected to the prop firm. That's why you should always check the reliability of the broker behind the prop firm. In futures, it's different. The data comes directly from the exchanges, like CME Group with its 4 exchanges, Chicago Mercantile Exchange, Chicago Board of Trade, NYMEX, COMEX, and is fed straight into your trading platform like NinjaTrade. Prop firms utilize live and tick-level market data feeds directly from major exchanges, ensuring that simulated evaluation accounts mirror real market behavior. Now let's compare the trading costs between these two types of prop firms. In general, futures prop firms are more expensive than Forex prop firms. Forex prop firms usually have lower costs, and many of them offer free trading platforms. But with futures prop firms, once you pass the challenge, you'll need to pay a one-time activation fee to get your funded account. After that, there are monthly data fees, which come directly from the exchange. For example, around $15 per exchange you trade, not paid to the prop firm itself. You'll also need to pay for the platform subscription after getting funded, because these platforms are only free during the challenge phase. Most futures platforms offer a 2-week free demo for anyone to try. When it comes to leverage, Forex and CFD prop firms offer extremely high leverage. It usually starts from 130 up to 1:200, and some firms even go as high as 1:1000. For futures, leverage works differently. It's based on margin requirements, which vary by asset. Prop firms usually provide a document explaining the margin requirements for each asset, so make sure to review it before trading. You're free to use expert advisors in most Forex prop firms. There are hundreds of EAs available on the MQL5 market, and many traders rely on them. Some prop firms say that, once you're funded, you must be the owner or creator of the EA. In future, some firms allow auto trading, but most of them restrict or completely prohibit EAs to ensure that trading is done by humans, not automated systems. When it comes to execution quality, futures have a clear advantage. Execution is fast and reliable, especially for tick scalping and intraday trading. In Forex, execution depends on the broker. If the broker is a market maker that simulates the FX market, you may experience slippage or requotes during high-impact news or periods of low liquidity. Prices don't come from a centralized exchange, so execution quality can vary. For auto trading, it's important to use a good VPS to reduce delay and ensure faster order execution. When it comes to regulation, futures prop firms are generally more regulated than Forex prop firms. But in both markets, there are good and bad firms. In Forex, many prop firms have scammed clients, especially those offering high-frequency trading accounts, which usually prohibit the use of MetaTrader. From my experience, the most reliable Forex prop firms include FDMO and a few others. For futures, the trusted names I've seen are TopStep, Apex Trader Funding, Earn2Trade, TickTickTrader, and several more. For the drawdown rules, both Forex and futures prop firms usually set a daily and a maximum drawdown. In Forex prop firms, most offer 2 types of drawdowns. Absolute drawdown, this is fixed, which makes it easier to scale up lot sizes and trade with more flexibility. Relative drawdown, this is dynamic and moves with your account growth. No matter how much your account grows, the stop level adjusts accordingly. For futures prop firms, the rules are usually stricter. They often use a trailing drawdown model similar to relative drawdown, but the challenges are much harder to pass, making it more demanding than Forex prop challenges. As a piece of advice, if you prefer to trade automatically using expert advisors, have a small capital, or are a beginner, even with some experience, it's better to start with Forex and CFDs prop firms. On the other hand, if you already have significant trading experience, the capital to cover all the fees we mentioned earlier, and you want to trade seriously as a full-time job, futures prop firms are the better choice. You can also gain experience trading Forex before challenging yourself with futures. Just keep in mind that futures are much more volatile. It's like a football player moving to the English Premier League, where the pace and intensity are a bit higher than in other leagues. Thanks for watching.